Good morning, guys. Okay, so this is an overview of gold. I'll be going through you guys about the current positioning that it's in. Why today would be tricky, but nevertheless, we can win it. So if I were to open to daily, you guys can see that the opening of this daily was a bit distorted. Meaning, during the opening of the daily candle, there was a push down that made the opening lower than the previous closing. So now, what can we expect from gold? So given that we are currently on Tuesday, Wednesday, we have to first observe the weekly. The weekly candle is important. Okay. So last week we managed to get the sell. And this candle was open on the Monday. Looking at here, we are currently in where we are right now here, this position is in a 50-50 zone. Either gold can just drop dead from here into this box previously, remember I said, or it can spike even higher to go to 1825, 1827. Really depends. So now, if it drops, it's logical, right? This is like the final retracement, poked at 1808. If it has poked at 1809, my sell limit, then the probability of the drop will be higher. Since it didn't poke 1809.3, I feel, so it is still, or there is still potential that it can retest that area and then only drop. So now we are clear with the weekly, knowing that we are in a 50-50 position. To buy or sell is both a risk because both outcomes can be done. Then we go into the daily. Okay, the daily. This blue box is a H4 box. So yesterday in this yellow candle, it has retraced up to the green box, the previous sell location on H4 as well. And then now this is the current daily candle. So if it was to drop, boom, in a red manner, it's logic, it has done its retracement. So this is the U-turn starting. For example, like this. The U-turn starting. The U-turn starting. The U-turn starting. Logic. But because there's still this one position up here that it hasn't poked yet, maybe it will poke here first and then drop. So on daily, it is still a 50-50. If you pick a trade now, when there's low volume, you are literally trading in the middle, correct? It can go up, it can go down. So we go down to the H4. Okay, this is a nice structure. Engulfing buy. But has it been respected yet? We don't know, because the next H4 is in 1 hour and 30 minutes. If in 1 hour 30 minutes it closes as a green here, maybe there's a potential continuation towards the upside. If suddenly before the H4 opening it breaks this green box, it can drop lower down to where? Minimum this area, 1787.10, this area. So we cannot rush the trade if we are not confident or we are not ready to lose anything. Why do I say that? If you were to buy here, nice, in the box. But if you want to buy now, you are buying in the middle. What can happen? Let me show you. This is an engulfing buy that is broken, meaning a buying zone that has turned into a potential selling zone. In that zone, we can see one engulfing sell has occurred over here. So if you were to buy here, yes, you can scalp the 10-20 pips. But what if it respects? And then boom. You get me? So this is why I recommend we just wait for the US session to trade. So then, even if we hit SL, it's not on a guessing game. So this one, if you were to trade now, we have to guess it really well if we want the 60 pips. So this is why you guys should practice the 10 pips right now. Trade it yourself, okay?